This is the review for Monday, Tuesday, and Wednesday. I have been away on Monday and Tuesday. That is why I couldn't do the review after the day end. Instead, we're doing all of the 3 days now. Uh, Also, a thing to note is yesterday, which was 18th, was the day when FOMC meetings was held and uh, the numbers were released. So maybe the market was waiting for something from some while, and uh, we'll just review what we did on 16th, 17th. On the days when we were away, I was trading from my mobile, and then yesterday I was at my desk. Also, what we've been doing lately is we've been uh, very aware about how we trade. I have been doing a lot of work around it, and in terms of trade selection, we've been quite picky that we've been putting on high probability setups only, things which wait for the market to come to the price point that we want instead of going and chasing it. Let's look at the DEX for 16th of June. The market opened somewhere around here. I was out and I was not available at that time, and uh, these moved move happened, and then when I later looked at the market, what I saw was we opened here. We've been negative. We went above the opening high, uh, came back, went above, and then we were coming back, and then I decided to short the market, saying that there's not much strength, so maybe retest. So I shorted on a pullback, added to my position, and I would say just because I was trading from a mobile phone, and uh, I was of the idea that if an ABCD completion happen, we might see the lower areas. That is why I didn't move my stop, even though it should have been moved, uh, and I got stopped out on this uh, candle. And if you see that shorting this was right, adding was also good, and when this candle went here, at least this stop on the initial should have been break even, and the stop on the other position should have been above this range high, which was, I would say, not so very good management, even though the idea was good, but the management was not all right. That is why I lost here uh, what I should not have lost. So this was some extra due that I paid because of not managing my position right. Seeing this continuous bull bar and this follow through, uh, I was of the opinion that we'll see new highs again, but I did not just wanted to buy right at the close. Waited for the candle to give a pullback, added to the position, exited some when we saw a high, added some back, and then exited at the new high. Is what we did in the DEX. Now these trades were all right. The stop was very tight around this area, but uh, this stop for this position was not right. It was not a very good management of my trade, I would say. You never know what is going to happen, but if you got it at the right price and it moved to your direction, the least you can do is move your stop. Did not trade it the Dow. I did trade it the Nasdaq, by the way. It was a strong open, and then we drifted all day after 8:30 or something around the time. Now Nasdaq, when there was one more mistake, I would say, trading from mobile, and not being at your desk and not paying attention is what costs you money. If you see, uh, the Dow was strong, the Nasdaq was strong as well. I got it. If you'd see, there's a continuous drifting of the price towards the lower prices was clearly being seen in the Dow Jones, but not in the Nasdaq. So it would state that Nasdaq is much more stronger than the Dow. So where you would want to short is the Dow and not the Nasdaq. I feel this boat when this boat left, I onboarded this one. I shorted here, added to my position, and then didn't so follow through. It went against me, and then I exited parts of it that I added back uh, here, and then I exited both around here. Now the original stop was at the high, and I would say it was around 50 points, 35, 75. It was even 40, 45 points. Now that was the original idea. Now in terms of the idea generation, it was a good trade. In terms of management, it was not well, and the reasons are, this ad was right. You didn't see the price drifting lower. Exiting it was maybe okay, and then maybe you add it back because now you feel that market is going down again. Maybe I was a bit emotional as well, as I was taking these decisions emotionally rather than being very mindful. I Seeing that it didn't work out, maybe I should have just held my original position anyway. uh, Shorting the stronger one itself was wrong first, so you pay the price of the mistakes that you make. Let's look at the 17th. On 17th, we opened here. uh, there was clearly continuous bear bars, and I was hoping we'd see lower prices. I shorted uh, after 5 and 3. This was, I would say, in the 8th minute we were around here, and it was uh, good profit, I would say, in a very small span of time. And if the market gives you what you have hoped for in a very small period of time, that is a gift, and you accept the gift and you go home, is my learning from a lot of my mistakes. So I just take my gift and I go home. I exited my position and then I waited, and when we reversed strongly and formed range, I thought maybe why not trade the range now. The market would stay in the range maybe until 5:30 or so was my idea. That is why I bought the range low. uh, it should have very quickly reacted to range high. That was my target, and then maybe I would wait for it to come back up again, or maybe short it. Was how I was planning to trade it. Didn't worked out. It went in my favor. I moved stop, got stopped out, and then I did nothing only until when we reached this point, and I was looking at it, and I was like, I do not maybe want to buy it. So the best thing that I can do is short it at a price when I do not even want to be on the sidelines. And it was a double top. I shorted here, booked my profits around here. Now while even shorting it, I had lower prices in my mind, but uh, this was 6, I would say, and news was supposed to be released, and I did not see a very good reaction after the news. That is why I closed my position. Did not trade it the Nasdaq, but I did trade it the Dow on 17th. Uh, on the push lower, this was, if you look at on the 15-minute time frame, you would see this was kind of a low end for 350 minutes bar. I bought around here, added to my position on a strong close, added here as well. And since I was trading from my mobile phone, I did build it the position, but I was hoping that we'd see a new high. Did not saw a new high. I got stopped out of all of my 3 positions. I didn't even move the stop. I mean, initially I had a lower stop. I did move it higher, but not to break even. While I did so, I would say 50 plus point move on my initial position. That was also a bad management. And then at least when you build it position and you know and wanted it to make a new high, which it failed, I could have shorted. I did not. Anyway, now comes the day 18th, which is yesterday. Now this was again the same idea. The market opened around there, so I push higher, came back, so I push higher, came back. Now this was the lower end of the range of the day. I bought after a close, uh, a bull close at the bottom, and I thought maybe we would see at least this range high or maybe this one. Let's see what we get out of it. But these were the obvious targets. Didn't work out in my favor. I got stopped out. I flipped, since if this range is low is not being held, we're going lower. I shorted, added to my position, but this 5-minute candle itself extended so much. I was of the idea that now we've seen a really big bar. Either we're reversing up or maybe we'd see some sideways move. Exited when it start getting way more bigger than the normal candle. Generally, what I look for is I want a steady move up or down. That is when I would want to stick with my trades. I do not want such climatic moves. These are the moves which generally put people off, and then they start closing, uh, taking more positions, and then you see erratic price behaviors. Anyway, it was uh, these were the 2 trades only. We waited patiently for the market to build the price action, and then we traded them. When we reversed back up, I wanted the market to at least go somewhere around this area, which would be the breakdown area, one. And secondly, uh, if I would have sold it and I would have held my position, I would have put my stop loss on the candle, the big one above high of this, and I wanted the market to at least go to that area, and that is when I would have wanted to uh, short it. It never went there, and it started falling, and I was seeing that it might go to a new lows, but I do not want to trade because it never fulfilled the criteria that I was waiting for. When we made the low, I was of the idea that a new low would attract buyers. We did so buyers, and then the market went to the area where I wanted to short it, and then we saw what we did. I would say I was not very attentive when this happened. I mean, the area where I wanted it to go, but anyway. And now looking at the Nasdaq and the Dow Jones, we opened here with a bear bar and then a strong rally. Uh, the if you notice here, none of the 5-minute bar even close below a prior bar, and we started seeing the close here, then a bull try, and then a failure. That is when I wanted to short it. I placed my stop above this area. I kind of hoped for a good move, but it was not happening only until when I saw this big bear bar, and then a continuation. And when I saw the continuation, I moved my stop, and then it reversed, got stopped out, and then it later went. Um, anyway, it was I would say good management that I moved my stop when I could. Uh, Good one, I would say. And then later during the FOMC, I shorted around here and I booked around these lows. Even in the Dow, when I shorted the Nasdaq, I shorted the Dow as well. uh, Now I did had lower prices in my mind, but this stop itself was big one. I moved stop when I saw a move down, but I closed my position because this was prior bar 15-minute prior bar low, and I was thinking that maybe a retest could come up, and I exited, and I did nothing later to only see it drift lower during the FOMC. I tried a long position. It moved in my favor, and then I got stopped out for zero, and then I shorted it as I shorted the Nasdaq below this candle in both, added to my position, and then I closed after a good move. This was a 100-point move, 80 80 or so, 86 I would say to be precise. uh, Overall I would say good management, good trade selection. Let's quickly look. This is DEX. So higher prices came back higher, and then we started trading lower. uh, all the way for a double top to trade lower. Initial opening was low. DEX was 16th. It was holding up, and then it started falling. DEX have been falling. If you look at the daily time frame, there's weakness in the market, and even after the FOMC we've seen weakness. So Thursday and Friday, let's see, these are the big days, the week close. How would it happen? And let's just wait for our high probability setups to form up, and let's